Welcome to the Smarter Money Life, hosted by Andy Mattingly, featured guest on IndyNowTV's Smart Money Minute, frequent financial expert for local news, and Smarter Money Life contributor at Forum Credit Union. Helping members live their financial dreams is at the core of what we do. Understanding how your decisions and habits impact your life is key to reaching those dreams. It's great to be back with you. I'm Andy Mattingly. Today our topic is budgeting. And what I'm going to do is focus on three types of common budgets that kind of solve different problems, but it's also something that maybe fits your particular situation so that you know that there's not just one way of doing it. And, budgeting is not something that's second nature to most people. The days of a cash society are over, and that did help people when we were only using cash make spending choices. But now it's way easier to spend, and you need to start thinking about finding something that's right for you so that you can accomplish what you want to do, but find something that's not too complicated. So let's start with the 50-30-20 budget. This is really a budget if you want to control your spending and you want to make sure that you're getting some money going into savings. Now, this is focused on net income. So retirement savings comes out before this, and this is just your take-home pay. 50% go to necessities. Now, it's important to know what necessities are. That's mortgage or rent, food, utilities, like electric, gas, and water, car expenses that don't include the car payment, basic clothing, and then all of your insurance needs like auto, home, and other healthcare expenses, even childcare expenses. These are necessities. 30% of your income can go to lifestyle expenses, but it's important to remember what's included in this. There's dining out, there's entertainment, and there's travel, but it's also your mobile phone, your internet, your streaming gaming services, and gifts. The last 20%, and this is what can make this budget very difficult, is you only have 20% to go to savings and debt. So credit card payments, student loans, auto loan, personal loans, those all come in here. And then you also need to be putting some money back in an emergency fund savings. So this is one of these very difficult budgets to get to if you have a lot of student loan payments, you have a big auto loan, you have a lot of credit card payments. So this is, something that you really have to work on if you want to get there. Another budgeting method doesn't involve dollar amounts, but it involves the number of transactions. So basically you say that you're only going to do so many transactions where money is going to leave you each week. So this could be that you're sending money via Venmo, withdrawals from an account, your credit card swipes or your debit card swipes, anything like that. You have automatic payments coming out. You set a certain number per week, and when you reach that number, you can't spend any more the rest of the week. So you have to start thinking about, getting to the grocery store, having gas in your car, because if you ran out of transactions, then you have to wait until the start of your next weekly period before you can make another transaction. Now, the last one, this one is really about refocusing how you spend your money and saving before you spend it, but it's really about having fun. And let me explain it, and then hopefully it'll be easy to understand. So you take 60% of your income and you commit it to all of your expenses. So this is all your bills, food, dining out, loans, everything. Then you take the last 40% and you put it into 10% into each category. So one is long-term savings. This is emergency funds and college savings. Then you have short-term savings, 10%. That's for any upcoming purchases. You want to buy a couch, you want to get a TV, and also unexpected expenses. You need tires for your car. 10% goes to your retirement. We want to be at that 10% in retirement, get the company match so that we're over 15%. The last 10%, and this is where the fun comes in, 10% of your net income, 10% of your income is committed to fun money. So you spend 10% on vacations, any entertainment that you do, any of your hobbies, like golf or anything like that. Now, it's easy to budget because 40% goes directly into savings, and then you pull it out. So if you notice, you got to save for those vacations. You got to save for that entertainment. And once you have the money, then you buy it. But it is a fun budget in that manner. Now, it's always important to remember that not all financial situations could be solved with the same tool, especially if budgeting is the tool that you need to figure out. The key is finding the one that works for you, not the one that works for your friends or your boss or your coworkers or your parents. You need to find the one that fits your unique situation. That's all we have for you today. Thank you for watching. To learn more, visit the Smarter Money Life page at formcu.com, subscribe to the Forum Credit Union YouTube channel, and look for the Smarter Money Life podcast wherever you get your podcasts. Remember, today you have the opportunity to build the tomorrow of your dreams. Until next time.